Hello, I'm Alan Kohler, founder of Eureka Report, now part of Intelligent Investor, finance presenter on ABC News and a columnist for the New Daily.
And I'm Stephen Mayne, Intelligent Investor contributor, Crikey founder and shareholder activist.
And we are the Money Café. And no longer a Manningham councillor, Stephen.
Yes, all happily retired, battening down the hatches with President Trump coming. So I've already asked questions at 2 AGMs this morning, Alan, and with Channel 9 starting now, so it's a busy time, and we've just had the American AGM, haven't we?
We've had the American AGM, as you say.
Or the quadrennial general meeting, the QGM, the meeting you have every 4 years, where the veteran chair decided to retire, tried to hand over to the vice chair, but the shareholders ran an alternative ticket, and bang, regime change.
And what about some of the rises on the stock market last night? Goldman Sachs, 13%. Wells Fargo, 13%. Tesla, 14.75%. Huge response. Morgan Stanley, 11%. Unbelievable. JP Morgan, 11%.
I guess he's a markets guy. Last time, amidst all the noise, one of the biggest things he did was tax cuts for billionaires and helping corporates. So at the end of the day, he's a billionaire from New York. That's near Wall Street, and the markets think he's good for business, I guess, isn't it?
Well, he said that he's going to cut the company tax rate from 21 to 15%.
There you go, straight to the bottom line.
That's number one thing, and also that there's an expectation. The reason the banks are all up is because there's an expectation that he's going to deregulate the financial system further. Or
crypto.
Elon Musk will do it for him.
Yep, and he made a lot of promises to the crypto world. So, and that ultimately governments controlling currencies. That's the ultimate corporate anarchy is crypto, and he was all over the crypto bros.
That's right, and the result of that is
deregulation. Here we come.
And Bitcoin is at a record high of $75,000 US.
Yep, money launderers rejoice. So you can transact without the government knowing. There you go.
Well, I think it's going to be a fantastic 4 years for the media.
Well, I was thinking that it's good for journalism.
Yeah. There's going to be tons to write about. There's never going to be a dull moment, I would say.
Yes, but trying to predict the unpredictable, that's the hardest thing. I actually lobbed I think I got the first Donald Trump question into an AGM yesterday at Domino's at 4 p.m. Jack Cowan, the billionaire. What is Trump going to mean for Domino's and world trade?
And what was the answer?
You wouldn't want to be China. The whole tariffs thing is a bit scary and bad for the world, but we're one of the few countries with the Americans have a trade surplus with us. So they probably won't come after us before they come after China, but it's going to be a scary time for geopolitics and Ukraine. So who knows? But very unpredictable, says Jack.
Yes, it is very unpredictable. That is very true.
So why do you reckon it happened?
Well, there's going to be endless amounts of analysis of that, and we'll add our little 2 bobs worth, which would be that I think the number one thing is the old Bill Clinton campaign slogan by his campaign manager James Carville, which was "It's the economy, stupid," and I think it was the economy, stupid. That in the past 4 years, the American Consumer Price Index has risen 25%. And in the 4 years before that, while Trump was president, it increased less than 10%. And the thing is that although inflation's coming down, inflation refers to the rate of price increase. It doesn't refer to prices themselves. So, the rate of prices increasing has fallen thanks to the big increase in interest rates, which is hard enough in itself, but prices are still rising. And so prices have risen by 25%. That's what people notice. And they want that to stop. Obviously, Trump can't do anything about that. But, that's why they've punished the Democrats, I'd say.
I agree. Look, I think it's very much the economy. It's an anti-incumbency vote the world over that we've seen since COVID. It's an anti-immigrant vote as well. So the whole border and the scare that he ran, these migrants are coming for your black jobs. They're coming for your Latino jobs. He got really big increases in support from those traditional Democrat communities, black voters, Latino voters, even young voters. And I think that scare about they're coming for your jobs, I will secure the borders, I will reduce crime. I think that plus the economic piece played in very well for him. So,
well, the other
and it's a little bit of anti-woke, anti-elite, anti-identity politics stuff in there as well. The leaning for a strong man, commander-in-chief, strong man. I think that, scary as it sounds, people have voted for that.
Well, that's the other chart that's worth looking at is the rate of illegal immigration into the United States. Although it's true that his language was inflammatory and everything, but the thing is that the rate of the number of illegal immigrants into the United States presenting at the Mexican border absolutely soared in 2021 and stayed there, and it was low during Trump's years. Now, I mean, was that due to Biden? Probably yes. I mean, he was soft on the border. And I think the Democrats and the left in general have underestimated the importance of that.
It was like Rudd Gillard and illegal boat arrivals. It was a similar story. The numbers told a story. The people didn't like it. The strong man with his tough talk versus the compassionate, more sympathetic, less stringent, strict prevailed, selling fear and paranoia. So, but look, how's he going to go with these mass deportations of illegals? That's going to send up food prices when there's no one working the farms. But, so, policy-wise, what's he going to do with Ukraine? Is he going to fix it in 24 hours? What's he going to do with Putin? Is he going to pull out of Paris? So many questions.
There was a nice opening to a piece in the New York Times by Peter Baker, who's been a long time, political reporter over there, and he wrote that in her closing rally, Kamala Harris scorned Donald Trump, who did not represent America. That is not who we are, she declared. And then Peter Baker says, in fact, it turns out that may be exactly who we are.
Yeah.
I mean, the Republicans have won the Senate, the House, and Trump has won the popular vote and the Electoral College. So it's a full, it's a full Republican sweep. So that is what America.
Triple play, and the pollsters got it wrong again.
Totally, that's right.
Just like Brexit, just like Trump 2016, no one saw this coming. Closest election in history. Actually, a comfortable triple play win for Trump.
Yeah, not close at all.
Not close at all. So I think Rupert played it quite well when all, the old money never Trumper establishment Republicans were jumping off. Rupert stayed true. The New York Post endorsed him. Fox News was solid. The Murdochs will be sitting there crowing today that they've, they'll be influential. They'll be in the tent. Jeff Bezos, interesting, wasn't it? Pulled the Washington Post endorsement of Kamala, fearing retribution from Trump. How all the different billionaires played. Elon Musk, Trump's anti-EV cars, he's pro-oil. So I did ask that question. I tried to. I didn't ask it. But at the IGO AGM yesterday, they got the world's biggest lithium mine at Greenbushes, south of Perth. What does Trump mean for us? He's pro-oil and anti-EV, but will Elon save lithium? Because Elon's got the big influence with Tesla and EVs. So
of course he will. Absolutely.
But what a play by Musk. It's just extraordinary how he lent in on that. Him and Joe Rogan at the death, I think, very influential. And, does James Murdoch stay on the Tesla board? James Murdoch stormed out of News Corp because of all their extreme positions. And, how Musk, is Musk going to be the efficiency czar? He's meant to be running Tesla, running rockets, running Starlink. What happens to him for the next 4 years?
And now he's going to run the government. That's incredible.
It might be one of those ones of the dog who chased the car. You don't actually want to catch it. What's Elon going to do with government power? And Trump, they will find it's a lot more complicated than easy populist slogans. They'll have a lot of people coming at them saying, do this, do that. The checks and balances will kick in. And so I think it'll be a lot harder thing to manage. And day one will be the best day, I suspect, for the Trumpists.
Well, on another matter, I've just come this morning from a book launch for Joe Aston and his book on Qantas. Which
did you interview Joe?
I did, and read his book. And
cracking read, isn't it? I loved it.
It's a hell of a book. It's fantastic. So, yeah, I mean, and the two things kind of came out of it for me. One, which are really kind of interesting lessons. Alan Joyce was made CEO in 2008, and he was, there for 11 years or something, or longer, 12, 13, how many years? 13? Anyway, 13, a long time. Yeah, and he disinvested in the company. He reduced the capital expenditure, and CapEx is a really important thing for an airline. So that when he took over in 2008, the average age of the aircraft, Qantas's aircraft, was 8 years. When he finished, it was doubled, 16 years.
Yep.
And that's that's what he did. But at a personal level, that approach rewarded him enormously. So he made, over those 13 years, $120 million.
Yes.
Because of the increase in profits that resulted from his disinvestment, essentially.
I agree. He did starve the airline of capital. Look, the shares are at a record high now. That's a little bit misleading because they haven't paid a dividend for years. So, the stock price is higher because they've hoarded the profits. Yes, they've done buybacks, but that actually drives the price up relative to paying dividends. But look, I thought the worst thing that Joyce did, and it came through in Joe's book, was the $1.6 billion in cancelled flights. Not telling the customers they were entitled to a refund, effectively making it impossible to claim a refund, and then sticking them in COVID credits with a ridiculously rapid sunset period, which was just going to flow straight to profits from non-delivered flights. I mean, that actually was the plan, which would have maximised Joyce's exit bonus profits, et cetera, and getting caught out on that, then having the ACCC ghost flights come through, then the illegal sackings. And Joe's work on all the detail of the illegal sackings, the judge after judge who said this was outrageous, the insights as to how the internal advisors said, don't do it, Qantas, don't do it, don't take the risk. And they did, taking advantage of COVID whilst on JobKeeper to illegally sack 1,700 workers. It was amazing chutzpah at the end of a dominating reign, and it was just enormous hubris driven by profit by Alan Joyce, and then trashed the brand entirely.
Yeah, there was an interesting quote from Crispin Murray, who runs Pendle Investments, the largest shareholder in Qantas, and he was basically saying if they'd just lowered the profit by 200 or 300 million and spent that much, just a little bit more on customers, the share price would be higher. It wouldn't actually result in a lower share price. It would have resulted in a higher share price.
Yeah.
But Joe's point also is that at $8, it's the problem is that the market is not pricing in the capital investment that has to come. I mean, there's a huge wave of CapEx that has been deferred by Joyce that now Vanessa Hudson's going to have to do.
Yeah, and she has got 20 new planes being delivered this financial year.
Yeah, but it's nowhere near enough.
Yeah, so it'll be a gradual thing, but you're right, they're going to have to spend many, many billions of dollars. But look, today with the shares at $8.31, they are capitalised at $13 billion. The market says they're worth $13 billion. Their positive cash flow from the super profits is well north of $1 billion a year, and looks like it'll stay there with the lack of competition from private equity owned Virgin, Rex falling over, things like that. So I think they will have the financial strength to gradually, over 5 to 10 years, get the fleet up to comparable world airlines. But you're right, it is a massive underspend. It was capital starved. It's a tired old fleet. And that's not to Joyce's credit. And
the other final thing to note is that the whole story about the book in the past week or so has been about Albanese's upgrades, which has meant that Joyce and Richard Goyder, the chairman, and everyone else connected with Qantas will be delighted that they've so far escaped the attention.
Yeah, that's right. I mean, I agree that Vanessa Hudson, you signed up to all this illegality with the sacking of the workers. All these judges said it was a disgrace. Joe Aston's book lays it all out. Why are you still there? That story's not being run.
No.
You're a 30-year veteran. You were there for every moment of this. So you're right, the bait and switch onto Albo. But look, Albo clearly was captured. He's loyal to his mates. He was mates with Joyce. He's on the teat. 28 years in Parliament, never pays for anything. outrageous that he's ringing up or contacting, communicating with to get upgrades. And Joe, it makes the point beautifully. If you were the financial services minister, you don't ring up a Big Four bank and ask them to put $50,000 into your bank account. And so you shouldn't be, as the transport minister, you shouldn't be ringing up asking for upgrades on private holidays for you and your kids and your wife and your family. So, yeah, it's a world of pain for Albo. And I think from this crisis, reform will come. And the whole sort of Qantas perks thing through the Chairman's Lounge, which no other airline in the world runs. And I note, Alan, you are a member of the Chairman's Lounge. So how did you get that?
Can't remember. It was a long time ago.
You're a man of influence. I mean, this is the point. It's something that they just dish out, whether you ask for it or not. And if you're frequently travelling, why wouldn't you take it? So that's how it works. I was amused in the book how John Mullen, the new chair, got the letter, sorry, mate, you're out of the Chairman's Club, because he was stopping being the chair of Telstra, but he'd already been announced as the Qantas chair. So he's messaging them saying, what's going on here? You've just kicked your new chairman of Qantas out of the Chairman's Lounge.
That's right. I'm also, I should say, in the posh Virgin's Posh Club as well. So I'm even-handed with my largesse.
Yes. Well, that's they compete to get VIP customers. Everyone wants to fly Qantas if they see Alan Kohler in the Chairman's Lounge. This is obviously the place to be. That's the airline to fly with. All the VIPs are here. And speaking of Qantas, I did enjoy their AGM in Hobart. I did lob a very curly, fizzing, warny leg break of a question about why the directors and their children get 3 first-class return flights to London a year and 9 business-class flights Sydney to Perth a year worth $100,000, not disclosed. And John Mullen was looking pretty awkward as he said, well, it does go to all the kids under 27 and all my kids are over 27. I was going to say, well, mate, we should expand the policy for grandchildren then. Clearly, it's not generous enough, Mr. Chairman, if your own family's not getting the benefit of this. So they should get rid of that. Just totally get rid of it, or at least disclose the damn thing. Because they don't even disclose it, the value of it, how many people are taking it, but they do admit they do pay the FBT. So Qantas themselves need to fix up the rort of perks and upgrades for the powerful, including their own directors and their former staff. I mean, Joyce will be flying for free for years, as will Richard Gorder. Trailing commissions.
Before we stop talking about Qantas, just on the matter of upgrades and Albanese's upgrades, the story to begin with was that he was ringing Alan Joyce up to ask for upgrades directly with the CEO, right? And then he's denied that subsequently. But what the book says actually is that according to Qantas insiders, Albanese liaised directly with Joyce. So in my interview with Joe this morning, I said to him, so what does liaise mean? And he wouldn't tell me. I said, come on, I'm not asking you to disclose the source of that information. Just tell me what you mean by liaise. And he wouldn't say. So I don't know. I don't know what liaise. I mean, so there's this kind of gap now between Joe saying Albanese liaised directly with Joyce and Albanese saying I never rang him and I didn't text. And that's where it sits.
I think it is telling that there's a plaque on the wall of the private apartment of Andrew Parker, the former head of government affairs at Qantas, and a former Sydney-based Liberal staffer, which Joe Aston is also a Liberal Sydney moderate ex-staffer, move in the same circles. And there's a plaque on the wall because Albanese came to Andrew Parker's housewarming apartment at his private apartment, and there's a plaque on the wall saying opened by Gladys Berejiklian and Anthony Albanese. So I think maybe I point you in that direction, possibly, Alan, for how it all worked in terms of the liaisings and upgrades and things like that. So Qantas has quite a sophisticated influencing regime, and I don't think Albo's ever denied receiving the upgrades. He's only contesting, did he ring Alan himself? So
That's
no
right.
question about the receipt of the 22 upgrades, many of which were for private holidays, which shouldn't happen.
Okay, now before our questions, let's have a quick word from our sponsor.
People are always trying to create wealth, but protecting wealth is just as important. Secure your financial future for yourself and your loved ones with life insurance, the essential safety net for your legacy. Head to investsmart.com.au/life-insurance for an easy free quote on life insurance options. Simply share a few details about your situation to get a range of plans and prices.
First question's from Russell. My son is a low-wage earner. At 30 years old, he has managed to get around $70,000 into his super. He's almost all the funds allocated to balanced, socially conscious option in his super fund. While I'm happy that it seems I've passed on a responsible approach to life to him, it concerns me that he is limiting his future retirement outcomes compared to what a more aggressive super allocation would provide. Interesting question. So
I think Russell might be conflating being ethical, socially conscious, as opposed to choosing the growth option.
Yeah, that's right. So the question is, would he be better off financially if he'd gone into high growth? And the answer is, of course, that's true.
Yes.
High growth over the long term will do better than balanced. But the question for your son is, does that matter to him more or less than being socially conscious?
Correct. Does Russell's son want to be invested in coal mines, which have been booming, and fossil fuels and gambling companies like Aristocrat, weapons makers? In a big defence world, a lot of the weapons manufacturers are going to do well. Yeah, so that's the trade-off is sleeping at night in terms of how you're making your money, and the socially conscious options are obviously negatively screening products that they deem to be harmful, but that's all pretty blurry as well. I mean, these options are often heavily invested in big tech, but is the Facebook algorithm actually doing more harm than good? I think you could run an argument about negatively screening big tech with sort of social media damage. So it is quite a fraught area. But the answer is yes. The history shows that the straight growth, forget about the ethics options within super, have scoreboard-wise delivered better returns historically. What happens in the future? Who knows?
The question is he doing this with his eyes open or not, Russell? And my suggestion to you would be, why don't you figure it out? Because you can get the different returns over the past 1 or 2 or 3 years from the high growth option and the balanced options, balanced socially conscious option. Have a look at those two things. Then get an online calculator, which are easy to find, Googling them, that would give compound growth over 30 years of $70,000 at each of those two different percentage returns, and tell your son what the financial difference is going to be when he's 60 years old.
Yep.
Between being socially conscious and in high growth, and so then he can make the decision with his eyes open.
That's right. And the lesson of compounding is it can make a large difference.
Very large difference.
Years. Very large. Quite a material difference. Now, Luke, he wants to understand the difference between left-leaning economists and right-leaning economists. Left-leaning economists suggest that government spending is the only thing, with immigration keeping GDP in the positive, and the government actions have supported getting inflation down through rebates. Centrist economists suggest government spending is adding to inflation and they should cut spending even if it means reducing growth and potentially hurting the economy and wages. Alan, you're the expert. Who is correct, the lefties or the righties, in terms of economic impact on growth and inflation and the like?
Well, they're both right. I mean, I don't want to sound like I'm sitting on the fence, but there's no doubt about it that immigration and government spending are the only things keeping GDP in the positive. That's true. But it's also true that government spending is adding to inflation. Is it adding too much to inflation? Is it resulting in the fact that the Reserve Bank is not cutting interest rates? Probably. So it depends where your emphasis lies. But it's definitely true that if it wasn't for immigration and government spending, we would be in a long, deep recession.
Correct. Yes. I was at the Cedar Woods AGM yesterday. They're a Perth-based property developer, and the CEO said, we're really struggling to find builders in Perth and Brisbane. it's really hard. We can't find enough builders to build our apartment blocks. And he particularly called out Brisbane and Perth, which partly probably explains why those property prices have also been booming, because the supply is not coming there. Not only is it lack of labour, but it's lack of planning reform in those two cities. You're not getting a lot of new development. So maybe we need to be soft on immigration and get a few skilled builders into those places to start delivering more housing. But I guess that's another issue. Now, Ryan, in the most recent financial year, Corporate Travel Management announced a buyback of up to $100 million. And by the end of the year, they'd purchased $26 million. And Ryan's concerned that about the rules and saying it might be sort of distorting the share price, and asking, just how much can a company buy back of their stock, and should there be different rules? And Ryan, I say to you, it's incredibly transparent, the system, because when you're doing a buyback, you have to announce every single morning to the stock exchange precisely how many shares you bought the day before. And, you're generally limited to 10% over 12 months. And it's very transparent. So, look, if a company announces a buyback and if they choose to buy too many shares, they will drive the share price up temporarily. But I don't think it's a problem, buybacks. I think that they are well deployed when your stock is cheap. We don't have many of them because of the franking credit system, because it's far better to pay franked dividends than do buybacks. The buybacks tend to be done by the companies with foreign earnings who don't have a lot of franking credits, like Qantas and like CSL. They have been two of the biggest users of buybacks over the years. But overall, there's nothing wrong with buybacks, and the system is very transparent, Ryan.
Yeah, but what he's complaining about is the idea that they announce a big buyback and then don't do it, and the announcement of the buyback pumps up the share price.
It does temporarily, but then on week 3, if you've seen they haven't actioned it, well, that is informed. The great pricing and weighing machines of the markets is, you can see it's a fake buyback announcement. They're not actually doing it. They're all talk and no action, and that immediately goes into the price. So, yes, it is a common trick to announce a buyback, because all of a sudden there's a perception that there's going to be 100 million of stock taken out of play, and that will temporarily drive the price up. But if they fail to deliver it, it's very, very transparent, because it's all announced every single day, is my point to
fair enough.
So you'll quickly know they're lying when they talk it up and don't do it.
John is wondering about companies providing benefits or incentives to shareholders. His local club Lime Gym, which is owned by Viva Leisure, says is providing shareholders with 1,000 plus shares a 25% discount off their membership. I took up the offer, and it provides a great return on my investment, but as a shareholder in the company, I can't understand why they do this. Surely these types of gimmicks don't attract many new customers or shareholders, and why not many companies choose to do these things anymore. What do you reckon, Steve? You own shares in 500 companies, but none of them are more than 1,000 shares.
Yeah, look, John is right that there's very few companies that run sort of shareholder customer regimes. I'm a shareholder in the Cairns Casino, and they'll always invite me and give me free accommodation if I fly up for the AGM. Woolworths shareholders used to always get and Treasury Wine Estates would get the wine offers that would come through, 20% discount if you're a shareholder. But they're not very common. I actually think that companies should try harder to impress their retail shareholders. Like the big 3 banks, in my view, should all hold their AGMs in Melbourne during the Australian Open, rather than prematurely pre-Christmas, and which means they close off board nominations before they've even revealed their results, which is bad governance. And they should encourage them to come into Melbourne. We'll take you to the tennis, and you can tax deduct your trip because you've flown to Melbourne to check out your big bank account. But they don't give a stuff about their retail shareholders, and they do nothing for them. The days of Solly Lou at Coles Myer with the shareholder discount card, when hundreds of thousands of Australians bought $500 worth of Coles Myer shares and flashed their shareholder discount card every time they picked up the groceries. That was the most famous shareholder customer scheme, and it actually distorted the share price. And it was very costly to run a massive share register of half a million customer shareholders. So Solly did that to be popular. It was a political campaign more than anything else, but it's basically a waste of money, and I don't think you should do these schemes for all shareholders. but you should do it for your high wealth customers. Treat your bigger retail shareholders like VIPs and take them to the tennis like you take the analysts and the big instos, because they matter too, but yet you just take them for granted. Emma, mandatory superannuation is only relatively new in the scheme of our working lives, 1992. Theoretically, millennials will be the first generation that retire with a lifetime of super. Do you think this will impact how much the government spends funding pensions by the 2050s? Will we even need pensions at all?
Interesting question. Because I think that it won't. I don't think any government will want to reduce the pension.
I think it's not reduce the size of the pension, it's to reduce the proportion of the population that are dependent on the pension.
Yeah, so it'll be dealt with through the means test, won't it?
Yes, but look, at the moment, there's 4.2 million retirees and 2.6 million of them are still on the age pension. And you throw in another couple 100,000 with carers allowance and disability pensions, and overall you've got 2.8 million people over the age of 65 who are receiving government benefits, who are not self-funded retirees because they've got so much in their super that they don't qualify for any government scheme. So I guess my take would be that super has been more a tax shelter than a genuine replacement for the age pension, given that we've got over 3 trillion sitting in super, yet you've still got 70% of retirees on the government pension. So only 30% of the people currently have saved enough through compulsory super to not need the pension. That may fall with compounding over the lifetime, as Emma says, but we will always need pensions because there's so many people out there, particularly women with lower balances, who are never going to have enough in their super, because you only get super if you've got a high-paying job. If you've got a low-paying job, you won't have enough super and you'll be on the pension no matter how generous the super scheme is.
Yeah, that's right. So what will happen is the means test will weed people out.
That's the idea.
Yeah,
that's the idea. Is less people over time dependent on the government because you've forced them to save through the world's most paternalistic saving scheme, lock it up for 40 years stuff. That I actually think that that's been good. But for me, the best thing about super has been it's fixed Australia's capital deficiency problem, where we were always reliant on foreign companies and foreign capital to do anything because we never had enough capital here. Now, with compulsory super, there's almost too much capital in Australia, and all that capital had to go around the world chasing a return. And you've got things like the Future Fund that's got over, well over 200 billion, and very little of it is in shares because there's not enough shares to invest in to start with, and they're getting better returns overseas. So compulsory super has absolutely fixed Australia's problem of not having enough national savings and being dependent on foreign capital to get the investment done. But I don't think it's solved the issue of getting the vast majority of Australians off the government teat for their retirement.
I think we should jump to Jason, who says, I read an article recently in the AFR that Melbourne house prices have dropped down to the 6th highest capital city median price and had one of the lowest growth rates since COVID. And in fact, Jason, Melbourne house prices are falling. So what's behind this, Jason wants to know? Is it due to house demand supply issue, low migration, or a property tax changes? How can Melbourne recover? Well, interesting point, because one way to look at it is that houses in Melbourne are becoming more affordable. And yes, we've got an affordability crisis in Australia, and everyone's kind of complaining about it and saying something needs to be done. Well, in Melbourne, it's being done. It's happening. House prices are coming down.
Yeah, and the government is doing more. This was Dan Andrews' final big policy decision, was shaking up the planning scheme, and Jacinta Allen is continuing with it. They're kicking councils left, right and centre to the curb. They're rezoning all over the shop. They're saying you can build in your backyard, no problem. So they are attacking the planning rules to fast-track supply. Topographically, they have much more sort of land, former industrial land in the inner city, Fisherman's Bend, E-Gate, compared to Sydney with all its hills and harbours. Melbourne's got a lot more inner city land for urban consolidation. And so that's why we will become the biggest city in Australia within 20 years, because we've got the capacity to add the people. We've got the government that is doing all the rezonings, but the prices are falling, and that's where I think the tax thing comes in. They have been punitive with their COVID taxes, their punitive land taxes, and people are selling out. Prices are falling in part because the government's broke. They haven't got any mines they can tap into to fix their huge deficits, and they're hitting the property market big time, and that is, I think, driving down prices. That's another factor in why Melbourne is falling. But you are right. It's more affordable. World's most livable city, So if you can cop the taxes, then buy in Melbourne. It's better value than Perth and Brisbane at the moment. That's for sure.
Yeah. And, again, we just say that actually Melbourne's doing, the Victorian government is doing what is required.
Certainly from a planning point of view, as a former councillor, I can now say that councils, we do clog it up far too much. And I do agree that the government coming in there and going bang is the right way to respond to a housing affordability crisis. But now with your book, Alvin, have we had any word on the political book of the year? Did I read somewhere that you didn't make the
I did not make the short list.
I mean, it's a great book, but is it the political book of the year? Possibly not.
Well,
it's not really a political book at all, is it?
Well, it's a bit political. Come on.
It's a political book. It's a magnificent book, and people should buy it. You are the resident oracle on all things housing now.
Well, the three books on the short list were David Marr's Killing for Country, which is about
his family,
Indigenous how they murdered
in the day, yes,
Indigenous people, which I don't think was a political book, and also Chris Masters' book on Ben Roberts-Smith. Is that political? I don't think so. I mean, the one that was political is on the short list is Alec Blaine's piece on Peter Dutton. Anyway.
Yes.
So anyway, I'm not complaining. There you go. That's life.
You've probably got the biggest selling quarterly essay of all time, have you, I guess?
Yes.
It is?
Yeah.
That of itself is an extraordinary achievement. So well done, Guru. You need to do a sequel at some point. Now,
we better have one more question and finish up. Which one do you think?
Oh, I think maybe Gretel. I was wondering if the constant and significant investment by our super funds is driving a perpetually increasing share prices. Do fundamentals of earnings and growth still matter, or are super funds got too much cash and they're just driving up the price of everything? Well, we sort of touched on that before, didn't we, about the surplus capital and the Victor Schwetz, that trillions and trillions of financial assets out there. Is it distorting valuations, Alan, such that just the old-fashioned profits and earnings growth and PEs don't matter as much as just straight out liquidity and financial assets?
Well, it's true that the super funds, the Australian super funds, all super funds, they have to put a certain amount of their assets into shares. So, and they've been running out of shares to buy in Australia, so they're putting much more into overseas markets. So, look, is that driving? I mean, I don't think there's any big change going on in the US, although, of course, the baby boomers retiring is going to take money out. So, look, I don't think it's that big of a influence, to be honest.
I think you're right.
On share prices. I mean, Victor's right. Victor Schwetz is right that the world's become financialised, but I don't think that it's necessarily the case that the money going into super funds is driving up share prices.
I mean, the problem with share, I keep asking this at the AGMs, is aside from the magnificent, top 10 stocks, the Wise Techs and the Wesfarmers and the Aristocrats, the rest of them are struggling. And the market's not pricing them properly, and that's why there's been 27 takeovers of more than 200 million this year, because the private markets are valuing assets more highly than public markets at the moment. Yeah. So I think the problem is actually the opposite, is the lack of depth, lack of breadth in the boom. It's too concentrated in a small number of big caps, Commonwealth Bank, CSL, and the market's thinning out at the smaller ranks. I mean, yesterday we had the ASX data for October, and it was the 21st month in a row of more delistings than listings. We had a net reduction of another 7. We've now lost 177 stocks in 21 months. We've never, ever had a 21-month run of shrinkage of number of ASX-listed stocks. It's now at a 15-year low. So the issue is not booming share prices and everyone booming. There's a dearth of floats. The issue is public markets not pricing public companies properly enough, and private markets valuing them more highly, private equity, etc., and taking out and thinning out the public markets. So buy up shares to get the share prices higher, because the only way you can stop yourself being taken over is performing well and having a high share price such that you're too expensive for private equity to buy.
Yes, indeed.
Here endeth the lesson, Alan.
Yes. And on that note, here endeth the Money Café. Thanks for listening, everyone. I'll be back in a fortnight. I'm having a week off next week to move house. So next week will be Stephen Mayne and James Thompson without me. So send in your question for them, and they'll answer it. Send it to the moneycafe@eurekareport.com.au. So I'll see you in a fortnight.
Happy holidays, Grandpa, and I'll see everyone next week.